Hey market friends, welcome back to Will of the Market. Today we're asking a big question. What does 2025 really look like in the history of the stock market? Are we living through the next dot-com bubble, a financial crisis rerun, or just another rate-driven bear market like 2022? As Yoda once said, difficult to see. Always in motion is the future, but history gives us some clues. Let's break it down. Right now in 2025, valuations are sky-high. The Shiller P/E is back to levels we haven't seen since the dot-com bubble. The rally is powered by a small group of giant tech and AI stocks, the magnificent few. Sound familiar? Yeah, we've seen this movie before. But that's only one angle. We also have a market hypersensitive to interest rates, with investors hanging on every word from the Fed. And lurking in the shadows? The fear that some unseen stress could trigger a full-on liquidity crunch. So to figure out where we are, let's rewind the tape and compare 2025 to three past years: 2000, 2008, and 2022. First up, 2000, the dot-com peak. Back then, investors were piling into internet stocks at nosebleed valuations. The Nasdaq was dominated by a handful of giants and dozens of future-changing companies that didn't have earnings to back them up. Remind you of AI stocks in 2025? Exactly. October 2000 told the story. The S&P 500 dropped about 0.5%. Not a crash, just a small leak. But that leak became a flood as the months rolled on. As Morpheus said in The Matrix, "You hear that, Mr. Anderson? That is the sound of inevitability." Now let's jump to 2008. This one was brutal. The financial system was on fire, banks collapsing, credit freezing. And October? The S&P 500 lost nearly 17% in a single month. One of the worst Octobers in history. Do we see that exact setup today? Not quite. But the risk of a 2008 moment is always out there when markets are built on leverage and liquidity. That's the nightmare scenario. Or as Harvey Dent in The Dark Knight warned, you either die a hero, or you live long enough to see yourself become the villain. For markets, 2008 was the villain. Finally, let's look at 2022. This was the year of aggressive Fed hikes. Growth stocks cratered, yields surged, and everyone thought the bear market would last forever. But here's the twist: in October 2022, the market ripped higher, gaining more than 7% that month. Why? Because sentiment flipped on the idea that the Fed might slow down. Relief rallies can happen fast when fear turns into hope. In 2025, we're in a similar position. Every Fed meeting is like a cliffhanger episode of Game of Thrones. You don't know who's going to make it out alive. So, what does this mean for us right now? If 2025 is like 2000, October could be the start of a long, slow unwind of overvalued growth stocks. If it's like 2008, we'd better buckle up. That means October could bring real pain. But if it's like 2022, we might just get a relief rally that surprises the bears. The truth? 2025 is a mix of all three. Valuations like 2000. Rate sensitivity like 2022. And, yes, lurking risks that could trigger a 2008-style shock. So here's my advice. Watch the Fed, watch market breadth, and watch credit spreads. That's where the story will unfold. Because as they say in Game of Thrones, winter is coming, and for the market, winter can mean either a cold correction, or a fresh new season of growth. Thanks for watching Will of the Market. Smash that like button, subscribe if you haven't, and drop a comment. Which year do you think 2025 most resembles? 2000, 2008, or 2022? Until next time, may your gains be strong, and your mistakes small.